Good morning, traders. It's Brad Matheny again. This is a version 2 of the MENT Movers training file. Today is the 21st of July. It's Friday. What we want to try to do today, let me get this over here, and we are going to take a look at the MENT.com expert growth member area and spread this out a little. We are going to go down to the home page here. We're going to click on the cycle patterns. As a MENT.com member, you get access to my cycle patterns, which are predictive modeling system for the SPY general market trend. Yesterday was a top resistance pattern. Today is a breakdown pattern, which is a carryover trend, meaning that it's going to carry over yesterday's primary trending. Breakdown would indicate that the market's going to be generally lower overall. What we are looking for is a downward market trend. And when we come back to the home page and take a look at the weekly game plan from last week, from the 15th, we are long-term 100% bullish. Volatility index bullish toppy, indicating that we could be near some sort of a pullback. Smart money trend has got a 38% chance of a volatility event in a trending mode. U.S. global markets are rising. U.S. stock market valuations are rising, which means we're seeing an increase in the overall trend of prices. Fear index is at 6.0 and falling, indicating a lack of fear. And sentiment is already at 6.35%. Above a standard deviation channel, which is pretty well above a normal range, typically around 4.5%, 5.5%. We start to get into an overbought territory, and it was contracting last week. General market trend is still bullish. U.S. global markets shot upward on strong buying past week. Gapping prices show volatility is extreme. The fear and sentiment indexes are falling. This suggests exhaustion rally phase is taking place. Metals are moving, stay hedged and protected, extreme volatility. So what this is telling you here, folks, is that we are generally bullish for the week. We are looking for that topping pattern, potential topping pattern on Thursday, yesterday, the 20th, and we're looking for a pullback trend today in the general markets, in the SPY and the major markets. Now, right now, we come back over here, and right now, the SPY is, well, I'll have to take a look at it here. Let me come back over to this, and what we'll do is we will focus on looking for the triggers. This is the value list. Now, the value list is different from what we looked at yesterday in the first trading file, which is the hot list. Hot lists tend to be more like, hot stocks, bigger volatility. Value lists are the bigger, broader names, kind of like the mid-cap, large-cap names. Tend to be a little slower, but tend to be pretty good triggers when you get them. So, again, what we're looking for, like I said, my favorites would be the 3, 4, 5s that generate these triggers, like TMUS here. Let's take a look at TMUS. So TMUS is a 4 as far as bull-bear trending, and an 8 as far as the bull-bear shift, with a negative 36.48 on thrusting. We have a bullish trend here, but no new trigger. So now here's TMUS chart. You can see we've got this deep basing. Let's see if we have any other basing back here. Kind of tough to see. I mean, we could theoretically pull a Fibonacci up here. Yeah, we've come right down to the 50% level. So we have a pretty solid trend. Now, generally, what I like to teach people is to look for these channels. Again, this gives you an idea of the volatility that you're going to expect in the trend. So you would pick channel highs. So I'm basically picking this high here and this high here, and then these lows across here, across this low here. So this gives me an idea that my actual trend because remember, it's going to take a couple of days to do this, is about a little over 2.15%. Now, we've got a very solid base here. We've got a good solid upward basing mode, which is right here. Kind of like that basing setup, which means that I have a pretty good opportunity. My opportunity would be to see this move up into this area, which would again be about a 4% move to the upside, maybe a bit more, and that's what MENT movers are about. Particularly the dailies, is to catch a pretty good trend, what we're hoping for. So again, depending on where it opens here, if I had my stop down in this lower area, I'd have about a 1.76% stop, maybe a little tighter, and I'd have a 3.5 to 4.5% profit target. And like I said, because of this upward trending, because of this recent basing off this low level, to me, this gives me a pretty good trigger. This is something that I would consider maybe putting 70, 80, 90% of my allocated capital into it. And remember, you're not putting everything into one trade. You're maybe breaking them out into 2, 3, 4 trades with a cash reserve. So TMUS looks very good, and that's the 4.8. Let's come down here and J&J. That was one of the triggers yesterday. J&J, big pop to the upside. That was one of the triggers yesterday we went over. Okay, we've got a lot more volatility here. So look at this trend, cross these lows, and then you're going to hear a lot of dings. That's an automated system running in the background. And then let's just go across these highs here. So we have a range here of almost 5%, hypothetically. So let's call it 5%. We just came off this base. We rallied up here. I would say that we have very limited upside move in J&J. It's a 2-7 flat with an 84.65. Could be a move back up into this area across here, which may give us an opportunity. And again, I'm picking these highs here as a relative target area. So that gives us a move potentially up to about 3.54%. So if I was going to take the trade, depending on where the market opens for J&J, I'd probably want to have a stop right below these highs, right in this area. And again, right below these highs here. So ideally, I would want to, depending on where the market opens, if I were to try to take this trade, I would be looking, if it opened here, I would have a 1.25% risk, and I would have a 3.54% potential target. And because, again, it is a 2-7, I mean, the 7 qualifies on the bull-bear shift. The 2 is rather weak. Let's come up here and look at Walmart, WMT. And what I'm doing here, folks, is I'm trying to show you how you want to look at these things as you're trying to make decisions. The point behind this is to show you that what MENT movers are capable of, what the technology is capable of. And remember, I want you to make the decisions yourself, not relying on me all the time. So we come in here, we have this range. Let's go ahead and determine what our price range is, which gives us some risk, 6.5% roughly. We better be looking at something around a 2-to-1 or 3-to-1 target area. Would have been better to be buying down here near this bottom area, but we have a decent base here. You can see this base setting up right here. We had a good move yesterday. Depending on where this opens, we have about a 2 to maybe 3% upside move before we get outside of the range. We could get something up in this area. We do have earnings coming up and dividends. But again, from a short-term standpoint, we would want to try, depending on where it opens, we would want to try to have something that has maybe a 1%, 1.25%, 1.5% downside risk, which means that our stop level would be probably right in this area. and our target area would be up into this area. And as long as we were to hold above this base, this opportunity for this move continues. Let's go ahead and take a look at the next one, ALE. Now again, that Walmart trigger, because of the broader range, I'd probably only put, 50%, 40% into the trade. It's in an uptrend. It's kind of a volatile uptrend. Okay, so downward tracking ALE. We are getting close to a potential breakout type of trend. You can see a nice little bump up yesterday. So I'm going to move off of these lows. Actually, I'll move it off here and call these rejection areas. These happen. Rejection areas, support and resistance is like a water level. Don't think of it as a hard floor or ceiling. The support is a water level. You toss a tennis ball into a pool, it goes underwater for a while, comes back up, and eventually settles near the water level. Same thing with price. When price gets below a support level, this is testing the support level, trying to break through the support level. If it is rejected and comes back up, that means the support level is holding. And if it comes back down again and rejects, that means it's holding. Comes back down again, rejects, that means it's holding. You can see it ran up here, tried to get above this resistance area, was rejected. That means the resistance area is holding, and we're going to expect a downward trend. Now, we have this upward base here setting up down here near this area. And I would be looking for support and resistance over in these areas, which is going to come around these little doji areas here or recent highs. And you see we have high here, high here, high here, and high back over here. So when I'm looking for a potential target, I'm really kind of looking, in this area, potentially, and maybe across these lows here. So, where does that give us for our opportunity? If we have a trigger here and it moves to here, that's 2.6% and 6.2% roughly. Okay, my stop would have to be fairly tight, meaning maybe 1.5, about there. So I would likely, if I got into this trade, set a very tight stop in this area, targeting either this area here or this area here. The ALE trigger is a, where is it? I was down here. ALE is a 5-4 with a 67% thrusting pattern. We are in a bearish trend, which is confirmed for this downward trend. We have resistance in this area. We might get a breakout up to this area. We might get a pull up to this area, but we need to look at this as a pretty quick target. Maybe 1.5%, 2.5% is all we get out of this, but I'm trying to teach you how to look at these. Now, as far as allocation level, probably 30, 40, 50%. This is not a fantastic setup in the sense that we're in a downtrend. We're trying to bet that it's going to go up, take a trade, a bullish trade on it, but there is still opportunity there. So let's go to TRV. That's, again, in my, what I call sweet spot area. This 5, 4, 3, 4, 5 with +3 to +10, whatever, shifting patterns and bullish thrusting is a very, in my opinion, very solid early trigger. So we have, again, take a look at the longer term here. Okay, we have some basing. Kind of hard to see, but, you know, we have higher lows, breakdown low in 2022, higher low. So we're getting from this level here, let's pick across here, some basing, and we are potentially up in this range here. So where we're at with this channel, is we're off of a bottom base here. Okay, that's a pretty good sign as far as I'm concerned. We have a potential for an 8, maybe 9% upside move. We're off of this base. TRV is a 5 with a 3 in a bearish trend with a 50.76 thrusting pattern. Now, do I expect it to rally all the way up here? Nah, not really. That would be foolish. What I'm looking for is to potentially fill this gap. So I'll draw a rectangle here to potentially fill this gap, which is already somewhat filled over here. And then we have another gap up here, you can see, and we may potentially see it fill this gap here. And if it were to do that and get above and fill this gap, then there's a pretty good chance we could end up seeing it come to this area. I don't know what I'm doing. Oh, I'm hitting control. Come to this area. And that would give me an opportunity here for a 3 to 5% target. Okay, 3 to 5% target is workable. I have a pretty good number here. I have a pretty good base area here. I can see this rotation off this base. Ultimately, this low is pretty darn important, okay? But when in reality, we have this middle channel right over here, the middle of this support, this doji, this doji, this doji. We need to, there I am hitting the wrong key again. We need to look at a stop level in the middle of this area. This is called the Beltline area. That's an automated system turning on right now, folks. So, in that regard, we would be looking potentially, depending on where this opens, a stop level of maybe 1 to 1.5%, a target level of maybe 3 to 5%, and that would be how I would attempt to trade this. This is a pretty good move because of this basing right here. So again, you have a pretty solid, downward structure, basing rejection back to the upside. So there we go. We're just getting ticks coming in. So it opened here. We would move here and here. And that gives you an idea of where and how I would set up this trade. Okay, let's come over to look at one of the stronger ones. 7-3 PG, Procter & Gamble. Do I like this trade? It just opened. So real quickly, we've got a lot of really big swings in kind of a flagging formation here, potentially. Do I like this trade? You tell me. Do you like this trade setup? Big flagging. 1, 2, 3, 4, maybe 5 to the upside. We've got base. So in reality, ladies and gentlemen, we've got a pretty solid basing pattern right over in here. We've got a 7-3 bullish with a 25. Initially, we would be looking for a breakout of this level. Then we would potentially be looking for a target of this gap here. Then eventually, possibly back into this area. So these are our upward targets. This gives us, here's where we opened, a bit higher. That's good. Here's a 1%, 1.65, and 2.9. So theoretically, let's call it 2 to 3% profit. And my target, my stop level would have to be down kind of near this base. So probably right around here where my stop level would be. I would have a 1.5% stop with a 2 to 3% upside target. That's pretty much a 1.5 to 1 ratio, maybe 2 to 1 ratio, and that's the bare minimum. Now it is a a big stock coming near dividends and earnings over the next week. You might get a big pump on earnings, could be very positive. So as long as you traded this fairly effectively, it might be fairly solid for an upside move. But I would consider taking it, maybe at 40-50% allocation. Let's take a look at one more real quick. Let's look at this big one here, Honeywell. Huge number. Plus 11 on the BB shift. All right, markets have already opened. So this is today's bar. Beautiful uptrend. You can see the uptrend here, giving us very clear indication that we have a solid predetermined trend. And that means that's very good for us. It also shows us that we are near these recent basing patterns here and here. Very good setup for us overall. We would need to be cautious of previous resistance. So we have the gap. Again, pay attention to gaps. We have a gap here. Could blow through this, attempting to get up into these upper areas. Potentially here. And potentially here. So this gap becomes an area that we're looking for price to rally above. That would mean that we would have from these levels, assuming we don't know where it opened yet today, excuse me, a little cough, we would look for potentially a 2% to maybe 5% target. We would be assumingly trying to predict a 1.9 to 2% to 2.5% stop, maybe a little less, probably right in this, 1.52, 1.7% stop. This would be a pretty good trade, in my opinion, assuming within a day or two we get confirmation of a breakout above this green rectangle gapping box area, because we have, again, we have this nice base bottom here coming back down into double bottom basing here, and then a whole series of steps moving higher. Ideally, what we're looking for here is this rally above this gapping area, maybe up into this area, which again be about 2.5, 3% on a trade. With an options trade, that'd be 15-20% real easy, depending on how long you have for the options. But then at this point, anything extended is just gravy. And what we're looking for, again, is we're not looking for, with MENT Movers, we're not looking for the, the 29-day 80% swings. That's not what MENT Movers are about. MENT Movers with the TTScanner trigger here, like HD. Let's take a look at HD. HD. So we're in a trade 2 days old. Okay, this is a TTScanner trigger. TTScanner triggers are longer term, and you can hold positions 83 days or longer. Here's a 56-day position. So when we're looking at the bull-bear trend and the bull-bear shift and the thrusting pattern, like I've been teaching you with some of these others, I'm showing you how to do short-term 2, 3, 5-day swing trading setups. If we wanted to take a look at the long-term setup of HD, let's take a look at this. We're two days old in HD with a long trigger, haven't hit our targets. Here's our targets, and where are we in the trade? All right, where are we in the trade? Same setup, guys. Follow the trend. Set the upper established channel. Okay, so our targets here are 323 and 332. Now we'll come in here, 323, roughly right there, and 332. Get my mouse to cooperate, roughly right there. Does that seem ungodly? No, not really. I mean, let's take a look at back where we are over here. The 332 target. is reasonable, and the 324.23 target is reasonable as well. We have good solid move up. We have good solid basing recently. We have this base technically as well. We are looking at a potential upward move up into this area, which only gives us, remember, it's 2 days old, so we've already got 1.5% profit in it. So maybe another 2.5% profit here to about 5.5% profit here. That's going to basically lock us in and leave us in a trailing position. Where I would be cautious of any potential breakdown would be a stop level potentially down in this lower channel right here. That's where I'd probably want to have my stop to make sure that any potential breakdown of this base is protected against any breakdown in the market. We do have earnings coming up in about 8 days, but again, this is a pretty solid trigger, and that's what the TTScanner setups are. These are more, 12, you call them 8 to 25 day swing trades. And what I'm teaching you with the MENT Movers to look for these setups, like Honeywell. Honeywell is in a trade, 16 days old. So let's go back to Honeywell. Okay, there's my chart. We were just looking at this. We're in a trade that's 16 days old. Come back here and 1, 2, 3, 4, 5, 6, 9. So somewhere right over here, probably, or over here, we got into a trade. We are already up 2.67%. So hypothetically, as of yesterday, yeah, so it's going to be right in this area. Somewhere probably right in here or right in here. And so we're already in a trade, a TTScanner trade on Honeywell right here. We're long 16 days ago, 202.56. We have a stop at 201.66. We've already hit our first target. We are in a negative thrusting pattern, which is a pullback pattern for Honeywell based on thrust. We've got a 1.48 profit factor and a 2.60 win rate. Pretty good win rate, profit factor, actually. Big move with this 11 to the upside. So this gives you even greater confirmation that you're in an intermediate term swing trade and you're getting a big shift to the upside. If this trend continues today, the thrusting pattern will likely turn back into positive. Let's come back over here and take a look. Remember, markets are open. So where are we trading? This is current right now as of today. And Honeywell is up $1.26 at 209.22. So understand that so far we have very little risk in the trade. We are waiting to see if we get up into this area for our target. It looks pretty good. And again, this is how MENT Movers work. They're here to give you opportunities, as I like to say, for 2 or 3 decent trades a day. You not only get the value hot list here, you get daily, weekly, daily on the left, weekly on the right, but you also get the Reddit list, which has a bunch of triggers over here. Here's a 7-3, 7-4, 7-4, 3-6. So these have moved a bit downward yesterday. Here's our weekly, 6-4, 6-7, 6-3, 110. I wouldn't, this is short, I wouldn't play with this one. And then you get the hot list, which was the one we looked at yesterday. 8-3, 7-8, 7-8. You come down the list, 5-7, 5-4, 5-7, 3-6. You basically have about 12 trades between these daily charts that you could look at, and you'll get somewhere between 3 and maybe 15 trades on the daily side, and then you could always come back over here and look at the newest ones for the weekly. So here, LPX is a new trade, 7-3, long, red trending, Here we have, let's look for anything that's newer. Deck. We have anything new? Nope, that's it. But we still have some good trending here. And like I said, that's the idea of what we're looking for, is we're looking for these opportunities for you to trade. Now remember, a lot of these trades, you know, you can trade options, you can trade smaller quantity stocks, one or two of these. You know, you're looking here to get, in a trade like this, you're looking to get 10, 20, maybe 25 bucks out of one share of this trade with a risk of maybe $8. So, you know, it's not going to kill you to be able to trade small numbers like this or even large numbers of shares. But obviously, as you get skilled with options, you know, picking a 5 or a 10-day option and understanding that you want to see this execute in a 10, 15, maybe 20% profit for your options trade, that's ideally your short-term target for options trading like this. You don't, you know, you might get lucky and get one or two trades a week that really rally like mad, giving you 30, 40, 50% profit in a trade. But when you get above 10, 8, 10, 12% profit, you want to really, you know, like consider it a pretty good trade. And if you get above 20%, like my friend says, that's really where you should be locking it in. You get 20%, you know, 4 or 5 times a week, and you're going to be 100, 120% return on investment every week, compounding your money. You could do 400 or 500% return on investment a month trading some of these. But again, it's all right here. All you got to do is learn to do what I'm doing right now. Okay, so let's BAC 8-2 new trigger. All right, BAC. What are the banks doing? BAC is coming back down. We've got a lot of rotation. Would you trade this? Ask yourself. You see this basing here? Basing. Big rally to the upside. Do we have any defined trending? Looks pretty difficult, really. Bank of America is basing. It's rallying up. I don't see a whole lot of trend. I see a channel like this potentially as a trend. I see it potentially being up here. You know, I can probably, well, I would call that an intermediate, and this one potentially being the upper, so I could draw this a little lower, whereas that would be the intermediate. And so now, assuming where I'm at with this, we've already passed this base. We've got a new trigger here, which gives us our credibility. We've got 64.45 on the thrusting pattern and 8-2, which is a pretty good long trade. Where do I think it's going to go? Where would I look for my targets? Well, this is where we have to get a little creative. So we have this here. It's already above this level. Where would it go from here? Maybe to here. And then maybe up into this level. Okay, is this ideal for me looking at the potential risks that I may have in the trade? So let's look at yesterday, figure out where we're at. 4.5% to 8, maybe 9%. That's my upside target. How much risk am I going to have, and where am I going to have to place my stop? Now, ideally, because of this middle channel, my stop level is going to have to be down in this area, maybe a little bit higher. Because of this bar here outside of this rejected range, I would pick not an immediate, but a projected stop level right in this area. So I am going to have a 4% risk for a 9% target in a fairly volatile move. Okay, what would I do in this case? I'd probably cut my trading down to maybe 50, 60% of normal allocation, trading a smaller amount, not trying to get overly weighted into this position. It has, in my opinion, a pretty good chance to move upward, especially with earnings and especially with this new high. We've got to be cautious of a rejection area up in this area. So once we get up in this area, I would try to move my stop up into this area to protect the trade. And particularly if I'm trading, let's say 2 or 3 options, I would probably sell 2 and keep 1 as a trailer. But like I said, in the long run, you have a lot of resistance. So as you move up here and you run into this area here, you're probably going to get some rejection, then maybe a move up into this area. So you've got to be prepared for the fact that, you know, you're really going to be looking at maybe a 4 or 5% immediate rally where you can profit off of that. That might be a 10, 20, 25% move in options. But your risk is fairly large as well if the trade reverses. Right now, the trade is moving down against us. You can see here, still manageable, still workable. Again, I would, if I looked at this upper gap here, knowing this pullback was likely to take place, I might try to watch a little bit, see if we get down into this area here, the midpoint of these previous bars, try to then execute my options trade here, meaning buying at a lower price. This is going to help eliminate my risk, so understand that I would only have 2.3% risk and about 5.5 to 9.5, 10% upside target. I'm essentially just timing my trade, knowing this setup and this long trade is valid. Remember, my stop system for the TTScanner is 3107. So we come back over here and, you know, our stop level for the TTScanner is roughly right here. So that's about where our stop level is on the TTScanner trade. So you can see when I had my stop level down here for my options trade, it was much deeper than where the stop level for the actual daily TTScanner Bank of America trigger is. You know, anywhere in this area or this area is a decent stop level. We would just want to see it hold above this midpoint channel right here. And again, hopefully this helps. So if you have questions or feedback or what have you, want to learn how to try to do this in a different format, let me know. I'm trying to just basically provide you guidance so you can learn how I would be looking at these trades and learn how MENT Movers, even though I'm not going to send you a list of, hey, buy this, sell this, whatever, that's not really what I'm doing at MENT.com. I'm trying to build these tools to give you the ability to come out and resource, you know, everything that you want. You know, you can look through this just like I did, 20, 30 minutes at the end of every day, focus on the ones that meet your criteria, find 2 or 3 really great trade setups every day, and you can do this pretty much for the rest of your life. So my goal is not to be, you know, specifically telling you buy this, sell that. My goal is to teach you how to use these tools more efficiently and become a better trader. Okay, so again, give me your feedback. Let me know how, you know, what you think of these videos, and let me know what you think I can do to help you more efficiently. All right, guys, thanks a lot. Bye.